Hello and thank you for joining us on Business Incorporated. I am Bisi Adebayo. Coming up today, financial turmoil in Turkey pushes emerging market currencies lower, and Malawi's tobacco revenue jumps 35%. Plus, Malaysian oil and gas company Petroleum Nasional acquires a 30% stake in Senegal's Rufisque offshore profound block. Well, let's begin the show with a review of intraday numbers from the stock market, starting from home here in Nigeria, where the all-share index was pointing 0.04% lower at noon. Now, the South African index was 0.69% higher, while Egypt was down close to 1%. The Kenyan Bourse is yet to resume Monday's trading, but finished Friday's session in the red. And in the Middle East, banks with exposure to Turkey contributed to dragging Gulf markets lower on Monday as investors remain concerned about their links to Turkey's currency crisis. All the markets we track are having a bloody start to the week, with Saudi index taking the deepest hit with over 2% decline at intraday. Abu Dhabi was close to 1% lower, while the Dubai index was 1.46% down. In Qatar, the index slipped 0.81% at midday Nigerian time. Meanwhile, European stocks were lower earlier today as investors monitored renewed trade tensions and a deeper slide in the Turkish lira. Well, let's cross over now to the Frankfurt Stock Exchange, where Orich Bartz is waiting to give us more updates from the markets. It's good to see you, Orich. Now, the dramatic plunge of the Turkish lira continues to worry investors. How is it playing out in the European markets today?
Well, it's depressing the mood. As you can see behind me, the DAX has recovered a little, but banking shares are still down in a major way. Big ones like UniCredit or ING of the Netherlands, and especially Deutsche Bank here in Frankfurt, which people feel nervous about if there's banking trouble, because Deutsche Bank's share is relatively low, and there have been worries in the past. Deutsche Bank is not said to have a huge engagement in Turkey, but there you go. The markets all across Europe were affected by this, whether you look at Italy or France, the UK, Switzerland. There's worries, and people are not hearing the right, let's say, willingness to take the right consequences in Turkey. The central bank is providing liquidity, okay, but what people would really like to see is a rate hike, and that's pretty well the consensus here in the market, also among people I talk to here in Frankfurt. Nothing else will do, and it should be a substantial rate hike. And there probably also should be assurances that it's not the last one, that the Turkish Central Bank, independent of President Erdogan, is ready to tackle inflation and the free fall of its currency.
Now, another major issue is that of a California court ruling in favor of a groundskeeper who claimed that the cancer that is killing him was caused by a Monsanto weedkiller, which he had to use. Now, the damages awarded are about $290 million. Of course, that's a major blow for Bayer and the share taking a hit. But the question is, how hard is this hit?
It's a huge hit. It's going down by over 12%. And it started off badly into the day, and the share price loss has increased with the day. And as it's sinking into investors what this might mean, of course, Bayer says itself that it sees scientific evidence overwhelmingly not proving that its weedkiller is cancerogenic. But of course, the court ruling says something else. Bayer is going to appeal that. But you know, there are hundreds of other cases pending that have already been approved to go to trial in California. And this could mean a lot of trouble for Bayer. So investors are all wanting to go through the same door at the same time on this share. Analysts I talked to before the deal was finalized with Bayer on Monsanto said, oh, it's a great fit, complementary in terms of regions and products, but the price for the takeover quite high. But the major problem, already analysts beforehand said, were these legal risks, and nobody could put a finger on what that exactly would mean. There was uneasiness, and now we see what it can lead to, what it has led to up to this point.
Oh, Orich, as we wrap up this conversation, now, apart from Turkey, which will most likely continue to cause anxiety this week, what else are market participants looking at for the week?
Well, I think President Trump and the White House continues to be in the limelight. He's, of course, also a major part of the Turkish crisis at the moment, why that escalated on Friday, slapping tariffs or increasing the tariffs that he's slapping on Turkish products up. But also there will be macro news from the United States. There will be information on retail sales, important on this consumer-driven economy, and also consumer confidence, which belongs to the same category. And here in Germany, there will be important macro news, a GDP number for the last quarter, and also there will be information on investor confidence. The ZEW, an economic institute here in Germany, polling financial market professionals each month on their sentiment of the current situation and what they expect. In the last month already tarnished by the trade conflict, so it'll probably go in the same direction, but people will be looking at that as well comes tomorrow.
Absolutely. Ulrich Bass, thank you for those updates, and we'll see you again tomorrow.